Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. 1. Reuters report, where's the Christmas rally? So, Reuters just dropped an article today asking a pretty interesting question, where's the Christmas rally we were all expecting? This week, the three major US stock indices, along with oil and gold, are all down. Now, this is pretty fascinating because for decades, financial experts and the media have been looking back at the past 70 years, and there's been this consistent trend. Before Christmas, US stocks tend to have a bit of a rally. On average, during the Christmas period, the stock market usually goes up by about 1.5%. But this week? No rally. Instead, we've seen some pretty noticeable drops. The Dow Jones fell by 2.25% over the past week, which is significant. The Nasdaq dropped by 1.78%. And the S&P 500 slid by 1.99%. So, the big question is, why isn't the Christmas rally happening this year? Why are we seeing such sharp declines instead? Well, Reuters breaks it down with two main reasons. The first reason? What they call unnecessary distractions. These are things that could have been avoided. Powell's hawkish tone. Fed Chair Jerome Powell came out with a pretty hawkish statement when he announced the Fed would be cutting rates by 25 basis points. His comments were a bit too aggressive, especially when it comes to future Fed policy changes. He warned that the market's expectations were too optimistic, saying investors might be hoping for too many rate cuts in 2025. But his wording was a bit harsh, which kind of threw everyone off. The next day, Powell's advisors had to walk that back a little with some more calming statements. It was a classic case of unnecessary confusion, which hurt the market. The government shutdown drama. We've also had the ongoing soap opera of the US government shutdown. It was a rollercoaster ride with temporary funding bills, but by the end of the week, they finally reached a deal. That added to the uncertainty, and investors didn't really need that extra stress right now. So, those two factors, Powell's mixed messages and the government shutdown, are being blamed for the lack of the usual Christmas rally. They created confusion and unnecessary volatility, which definitely impacted the market. But Reuters also points out that, historically speaking, the Christmas rally is actually the week after Christmas, not this week. So, technically, the true Christmas rally might still happen next week, particularly the first half of the week. For investors, though, this probably doesn't matter too much. It's more of a Wall Street tradition or a bit of gossip. 2. MarketWatch report, 72% chance of making money in 2025. Now, shifting gears a bit, I wanted to share another piece of news from today's MarketWatch. The headline is pretty optimistic. You have a 72% chance of making money in stocks in 2025. With the market showing some weakness last week, a lot of people are worried about what's coming in 2025. But the MarketWatch is saying, don't worry, history shows that there's a good chance the market will keep going up. Here's why. Since 1794, the average annual return for the US market has been 9.2%. Historically, the market has had a 73% chance of going up in any given year. So, based on that data, the probability of making money in 2025 is about 72%. The second reason is based on the performance of Vanguard's index ETFs. After 5 consecutive years of bull markets, the 6th year has historically shown a 72% chance of continued growth. Now, I know this might sound a little bit like fortune telling, but they're basing this on solid historical data. Some of you might be familiar with Vanguard's index funds, especially if you follow Warren Buffett's advice. He's always said that if you're a beginner and don't know what to invest in, just buy an index fund. And when it comes to index funds, Vanguard is one of the big players. They offer all sorts of options, from broad market indices to more specialized funds. But like anything else, buying index funds isn't a guaranteed win. Just because you buy an index fund doesn't mean you'll make money. However, in the long run, the odds are in your favor. The key, as Buffett says, is to hold onto your investments for the long term. That said, if you're thinking about investing, remember the golden rule: you need to know what you're investing in. Don't just follow recommendations blindly. Take some time to understand what you're putting your money into. No investment is without risk, so make sure you do your homework first. That's the latest on the market. What do you think? Will the Christmas rally show up next week, or is it going to be a quiet holiday season for stocks? And do you think there's a real chance of making money in 2025? Let me know your thoughts. Today's third report to share with you comes from NPR. Biden signed stopgap spending bill, preventing a government shutdown. So, in case you missed it, NPR just reported that President Biden has signed a spending bill into law, which officially extends federal government funding through March 14, 2025. This comes after Congress managed to pull off a last-minute deal, avoiding a government shutdown. If you've been following US government shutdown drama for a while, you probably know that most of the time, it's more of a spectacle than a true crisis. The two parties just like to bicker over their own interests, but in the end, things usually get resolved. Yesterday, a lot of people were chatting online about how Wall Street isn't too worried about this back and forth between Democrats and Republicans. Even if there's a government shutdown, they say, the market typically won't react too negatively. In fact, if stocks dip during the shutdown, they tend to bounce back once the shutdown ends. It's like the market just needs a little time to adjust. Now, as the news spread, the conversation took a bit of a political turn, especially with some conservative media outlets claiming that Trump and Musk played a masterful political game. Their theory is that Trump rejected the initial proposal in the House, pushing for a debt ceiling increase while also making sure that all the extra spending measures were removed from the bill. The idea is that Trump was playing hardball from the start, setting a high price and eventually getting what he wanted, essentially stripping away the extra measures while not meeting his own demands on the debt ceiling. According to some conservative voices, this was a win for Trump, who, alongside House Speaker Mike Johnson, supposedly worked together to play both sides to get the clean spending bill passed. But not everyone is buying this narrative. In fact, many other media outlets point out that Trump's influence over Republicans might not be as strong as some think. During the vote on Trump's proposal, 38 Republican House members voted against it, which shows that not everyone in his camp was on board with the plan. So, while some are calling it a masterstroke by Trump, there's also a lot of frustration within his own party. After those 38 Republicans voted against his proposal, Trump's allies went on the offensive, with Steve Bannon publicly calling for Speaker Johnson's ousting. Meanwhile, Trump's son, Donald Trump Jr., joined Bannon at a rally and directly attacked those 38 Republicans, labeling them as enemies alongside the Democrats. This wasn't just some political theater, it got pretty personal. But, all that drama aside, the crisis is officially over now that Biden signed the bill. Congress is heading into the holidays, and the market dodged a big bullet. With that uncertainty out of the way, there's a good chance the Christmas rally we've been waiting for might actually show up after all. What do you think about all the political drama around this spending bill? Does it feel like a win for Trump, or more like a case of Republican infighting? And are we in for a nice market bounce heading into the holidays? Let me know your thoughts. Next is Wall Street Journal report. Trump warns Europe to buy more US oil and gas or face tariffs. Here's a pretty bold move from Trump. According to the Wall Street Journal, he's now warning Europe that it needs to buy more American oil and gas, or else face tariffs. Yep, after threatening Canada, Mexico, and China, Europe's the latest target of Trump's trade tactics. This could be his fourth tariff threat in recent months, and he's not holding back. So, here's the deal. Trump posted on his Truth Social platform, telling the EU that they need to massively increase their purchases of US oil and natural gas to help close the massive trade deficit the US has with Europe. If they don't, well, tariffs are coming. And guess what? After this announcement, European stock markets took a hit, with the Stoxx Europe 600 index dropping nearly 2%. Of course, not all of that drop is because of Trump's comments, but it certainly played a role. Now, Bloomberg has a deeper dive into why Europe might have a hard time kicking its Russian energy habit, which adds some context to Trump's threat. Their article, Why Europe Can't Seem to Kick Its Russian Energy Habit, goes into detail about how Europe, even with sanctions on Russia for its invasion of Ukraine, is still heavily reliant on Russian energy. The sanctions aren't as airtight as many think, and in fact, some European countries have been skirting those sanctions entirely. Going back in history, the relationship between Europe and Russia on energy started back in the 1970s when the Soviet Union and West Germany signed a gas pipeline deal. Over the decades, Russia became a major energy supplier for Europe. By the time Merkel was in charge, Germany was getting more than half of its natural gas and about a third of its oil from Russia. Even though there have been sanctions due to the war in Ukraine, Russia's gas pipelines are still a cheap, convenient option. As of today, Russia still accounts for about 15% of the EU's natural gas imports. Despite sanctions, countries like Austria, Slovakia, and Hungary are still major buyers of Russian energy. In fact, countries like Spain, France, Belgium, and the Netherlands have also been importing Russian LNG, liquefied natural gas, often by tanker, which ends up mixed into Europe's broader gas supply network. So, technically, even though Germany isn't directly buying Russian gas anymore, it's still getting it indirectly through other countries. The only EU countries really cutting ties with Russian energy are the UK and a few Baltic states. The rest of Europe? Still very much in bed with Russia when it comes to energy. Now, Trump's push for Europe to buy more American energy isn't directly about sanctioning Russia, but rather about trade imbalances. The US has a significant trade deficit with Europe, and Trump's message is clear: if you want to fix that, you need to buy more US oil and gas. Over the past few years, US LNG exports to Europe have surged, especially as a result of the sanctions on Russia. Right now, US gas holds a 19% share of the European market, surpassing Russia, which now holds 15%. Before the Ukraine war, US gas only made up about 5% of Europe's market, so this is a big shift. Trump, though, isn't satisfied. He wants even more US market share. How's Europe reacting? Ursula von der Leyen, president of the European Commission, quickly said that the EU shares common interests with the US. When it comes to buying more American gas, she's not saying no. She's open to it, so there could be a deal in the works. But let's be real, this isn't great news for Russia. If Europe starts buying more American energy, it could weaken Russia's hold over the continent. Trump's position on Russia remains complicated, though. His camp has expressed both tough and more lenient stances toward Russia, so this whole situation is definitely a bit of a balancing act. What do you think of Trump's latest threat to Europe? Do you think they'll cave and buy more US energy to avoid tariffs, or will this just escalate tensions even more? Let me know your thoughts. Finally, here's the fifth news I want to share. 2 US senators oppose Biden's chip restrictions. In a move that's stirring up some debate, 2 US senators are speaking out against Biden's new chip restrictions aimed at China. According to the Wall Street Journal, the Biden administration recently announced a plan designed to stop China from using advanced AI chips, specifically targeting the likes of Nvidia and other high-end chip makers. The goal is to prevent China from indirectly importing these chips via international channels. Now, here's where it gets interesting. Democratic Senator Maria Cantwell from Washington and Republican Senator Ted Cruz from Texas have teamed up and sent a letter to President Biden. Their argument? These tough restrictions could seriously hurt American tech sales abroad and might push foreign buyers toward China's Huawei and other competitors. But here's my take on it. It's fascinating that it's not just Republicans like Cruz raising objections, Democrats are on board, too. Their reasoning is that if China can't get Nvidia chips, they'll just turn to Huawei for alternatives. But hold up, this logic doesn't quite add up. If Huawei's AI chips could rival Nvidia's, why would China need to import Nvidia's chips in the first place? And isn't the challenge for companies like Nvidia not just the Chinese market, but the fact that Huawei could eventually become a competitor on the global stage? The reality is, Huawei's chip technology isn't anywhere near the level of Nvidia's right now. That's exactly why the US is tightening restrictions on Nvidia exports to China in the first place, to maintain its tech edge. So using Huawei as a reason to oppose the restrictions just doesn't hold water. This situation shows just how complicated US politics can be. These 2 senators are pushing for a loosening of the restrictions, and while that may seem surprising, we shouldn't forget about the role of lobbying and campaign donations. The US has a very open lobbying system. If you've got the money, you can sway lawmakers to change their stance. In fact, it's possible that these senators are being influenced by Nvidia's public relations efforts. This isn't a new phenomenon, either. Take Senator Rand Paul, for example, who's been a strong supporter of TikTok, primarily because Beijing-based ByteDance major US shareholders have been longtime donors to Paul's political campaign. So when you break it down, many of these seemingly strange political moves can be understood through the lens of money, specifically political donations. Once you connect the dots, some of the more puzzling headlines start to make a lot more sense. That's all for today. Thanks so much for watching. If you found this video helpful, Don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.